The Hong Kong property index now has climbed 12% this year.
That's right, 12% so far this year. If you take a look at the chart, though, look at January, where it hit a low. The Hong Kong property index, the Hang-Seng property index, hit a low. Since then, until now, the Hang-Seng property index actually has gained 37%. So that is quite a surge in less than 6 months. Now, if you look at the 20-year chart, you can see that against the broader Hang-Seng, in fact, the Hang-Seng property index has climbed its highest level in nearly 20 years. The last time it was actually this great was actually October 1997, and that was just before the Asian financial crisis, and we all know what happened in the Hong Kong property market after that with a rather large collapse. Now, let's take a quick look at the Hong Kong property stock, which is HSP Index MRR on the Bloomberg. Now, you can see that the big ones are all up by more than 20% so far this year. You can see Wharf Holdings there, New World Development, and also Sinoland, all up more than 20%. Sun Hung Kai just a little bit under at up by more than 19% so far year to date, Betty.
Okay, so certainly we all had bad memories of that big bubble bursting. What about this time around in terms of what's driving the real estate prices up?
Well, there's been some stabilization in home prices. Now, the property market here, home prices hit a record high in September last year, and since then they have been dropping by about 13% so far. But that drop has in fact started to bottom out, and investors are looking at that and thinking, right, okay, maybe a good time to buy. Also, we're looking at borrowing costs, Hong Kong borrowing costs near record lows. Of course, that is tied somewhat to the US because the Hong Kong dollar is pegged to the US dollar, but worries about an interest rate rise had eased in the last few months because expectations about a US Fed rate hike had eased as well. But of course, with the stronger US job numbers on Friday, that could change.
Well, you know, given just the pace of this with these property shares, some saying climbing too far, too fast, does this actually sound the alarms that we actually could be seeing a collapse then?
Well, I don't think the collapse would be as great as, for example, after or during the Asian financial crisis, because that really was a rather large drop then. But there are some who are saying, you know, there could be an impact on property prices here. So BOCOM International and also Baring Asset Management saying Hong Kong economic growth generally is weak, and also there's been a large and quick increase in the supply of apartments in Hong Kong. Bloomberg Intelligence is saying that the unsold units completed or under construction in Hong Kong jumped to 71,000 at the end of June, which is the highest number in 12 years. And this is part of the Hong Kong government's drive to increase the number of flats and apartments available to people in Hong Kong because of the generally high property prices here. But that, of course, could impact overall property prices.